3. Okay. All right, sounds good. So, and before we begin, just a quick reminder: if I feel like certain things that you're asking, I cannot, I cannot talk about them because of my NDA, then I'll just let you know that something is like outside of the scope of what I can teach or explain. Okay, but everything else should be good within the ICT free content.
Yeah, exactly. Perfect.
Okay. So, what do you want to start with?
Yeah, so like that's perfect that we start with the EURUSD. So I would like to talk about the ICT inception model, but yeah, mainly on this pair. We could look maybe on another one after that. But so my first question would be so what would be your step by step process like on a daily like on a basic day? What would you start with it? Like your analysis, would
Mhm.
you start with on a certain time frame, then go lower for your execution, and what would you like? What is the first thing you're looking at, like when you open on the chart in the
Okay.
morning or
Okay,
at the
got it.
beginning of the session?
So, yeah, my approach is a little bit different, as you might know. I don't really, well, I do have like like I do go on the daily, can see, let's say I wake up an hour and a half before New York session, and or maybe if I sit down on a Sunday, I would mark up the high time frame gaps mostly. Like I like gaps. So let's say the first thing that you will see, just obviously this imbalance. We do have this huge imbalance too, but or things like what really stands out to me is like I'm thinking about where price might go in terms of liquidity, like double tops, double bottoms, like classic retail patterns like this low, right? To me, this stands out because relative equal lows, just like ICT teaches, the potential draw on liquidity. And really, if you look at it this day, also this day came close. So in a way, this is your triple bottom, but it closed above, and then 2 days later just smashed through. So this is something obviously a big deal for me. What I'm looking for, imbalances like this where price consolidates a lot, and there was, I believe, actually Michael mentioned that there was SMT with the DXY dollar on the daily. So I'm looking at mostly imbalances, not so much order blocks. Like order blocks, I can use like for targeting purposes. Let's say if I was shorting from here, I would just mark this candle, body of the candle, as your order block for if I want to exit, at least take partial profits. But mostly I'm interested personally in imbalances. And then, but daily chart is not always required. I'm very comfortable, especially as a scalper. Like I usually this is what I do. I just zoom out a little bit to give me a week or a little bit more, like maybe week and a half of data, right? And I just go on the 1 hour chart and do the same things. Like I mark let's say equal consolidation. This is kind of, to me, like this highs stand out, like equal highs, even though this high did go a little bit above, still it's very shallow run. So to me, this is just consolidation where liquidity will be resting. And you can refine the daily imbalances to 1 hour imbalances. So if I just remove this, like again, something like this, clearly an imbalance, and you saw price perfectly beautifully respecting it, right? um so that's, yeah, those are the two main things: imbalances and like buy side sell side liquidity in terms of like double tops, double bottoms. Or I like to look at trend lines also. I think it's a very good thing to, besides learning just ICT, it's actually good if you know a little bit of classic retail patterns, like or just trend lines, supply and demand zones, because you can see what the most of the technical world sees, and you just do the opposite. That's kind of your liquidity. So things like this, I would say this is probably the way you would draw a trend line, right? And well, it got just completely destroyed. So things like that, I just keep an eye for it within the right context. But and then just the daily 15-minute chart. I like New York session because I think it's the easiest session to trade, especially if you are a new trader. because you have the benefit of seeing what Asia did. Like just put Asia for a
Yeah.
second.
Mhm.
Asia and London did, and let's say for this example on Friday, yeah, it was NFP, so it's not. But let's just assume it wasn't NFP. But the general idea that still, if you have this huge displacement in perfect, like in London kill zone, so New York can potentially reverse to the upside, right? Especially when this huge rundown took out the trend line liquidity. So there's a potential for a reversal. You can see some imbalances here on the 15-minute chart also being respected. This was NFP, so all those wicks, of course, is just a noise, but the body is closed inside this gap. This was nice. So those are the things I'm looking for, and then when I actually execute, it's all about time and price. I do well. Actually, if we look at euro, also obviously you want to look at this was a good. If we look at Thursday, let me dial back for a second. So you see, I look at SMT divergence. Do you know from what SMT is?
Yeah, no, so you would look to on the DXY?
I look at DXY, yes. So this was a really good example on the highs and usually the strong SMT happens on the highs or lows between different sessions. Because if you look at especially on the 1 minute chart, there can be so many fake, like, fake out SMTs, like, but if you consider again, time and price, if you consider this high, well, this high was pretty much almost established like at the start of the London session, 2 o'clock, a little bit above it, like 145, but close. So let's say this was pretty much London session, and this high was already coming into a New York session almost also. So this, it took 4 hours to establish this high. So that's I'm looking at in terms of like how long does it take price to establish certain patterns, right? So 4 hours, that's a significant amount of time. And then if you look at the same time at DXY, because I was looking at it also after it happened, when after I woke up, like I saw it, I missed it. You can clearly see that while Euro failed to make a higher high, DXY on Thursday perfectly did. This was your Kraken correlation, right? It made a low. So technically Euro should follow and make a higher high, but it didn't. And again, the timings were good. Took about like a significant amount of time to create this. And again, this happened inside. What makes it a high probability reversal trade is that it happened inside this 1 hour imbalance, right? Like the when like we outlined previously. So to me, this is like a very good indication, another confirmation that we have SMT inside a high time frame PD array
Mhm.
in the form of imbalance. So this is usually a high probability trade to start looking for shorts. And honestly, well, I immediately see, let's say, on in a way, this was your 1 hour imbalance and kind of, well, although it did not overlap, well, this was an imbalance here. So this was the overlapping area, but price never hit it here. So if this was, let's say, if price hit this area, this would be my inception model. You could sell this short, and this was also pretty much at the start of New York session, but it didn't. That's fine. So what I would do if I have this in mind, I want to go short. I want to see, like, if I go short, where would I take my position off? What's the obvious pool of liquidity? So we have this low, right? And price drops below it. So if you just need to think in terms of, okay, if I short, where do I offset my shorts? So like where is the sell side liquidity to oppose the shorts? And you can go on the 5 minute chart. Let me see here. Well, actually, this was a good example of there you go, ICT YouTube model. You have your, again, high time frame SMT 1 hour chart. You have your displacement FVG, break of market structure on this swing low. And why, let me remove this, already saw it. Why I like this swing low is because this was the last swing low, right, that created the highest point in this fractal. So sometimes you would, like how I personally differentiate between better setups is sometimes you won't really see a swing low before this high forms, and then there might be a swing low, let's say here, price does a little bit, goes higher and then drops. I personally like to only look at setups that have a swing low before the highest point was created. So that's kind of my personal confirmation for the ICT YouTube model, not after. Like sometimes I've seen his YouTube videos. He would do, he would show a swing break of swing low after the high was formed, and it plays out, sure. But for me, this is just my personal filter. I'm not saying it's like the right way to, correct way to do it, but that's how I see it. So does this make sense so far?
Yeah, that makes sense.
Okay,
And
so
we have like
yes.
a following question into that. Like during when you're monitorizing during
Mhm.
the session. So I've been like the ICT model has been working very well for me, but sometimes when I'm monitorizing on the 1 minute, I could get lost like on a not like fake market
Mhm.
structure pick. So do you think that like on this perfect example on the M5, it would be like more interesting to monitorizing only on the M5 and then executing when you see your market structure breaks like on the M5, then executing on the M1 and not like only monitorizing on the M1. I don't know how do you do it yourself, but
Yeah, that's a good. So for me, again, I've been training for almost 5 years, so I mostly focus just on the 1 minute. But I think it's a really good filter. Yes, you can get lost on the 1 minute easily, but with time and experience, you'll start seeing those things better. But while you kind of new and learning, this 5 minute I think is a really good filter because there are less. I mean, the structure usually can be better defined. Like here, you can clearly see you have a swing low, it was broken. So to me, this is a, yeah. Once you see something like this on the 5 minute, then you can mark up an imbalance and you go on the 1 minute chart to see, to look for your entries
yeah.
so you don't get lost. That's a good point. Yes. And I think this is, wait, hold on. Give me a second, please. Hold on. Just turning the AC off. Okay. So, and then once you define this, because if you look at it, yeah, like on the 1 minute, there's so many, well, honestly, this is your swing low too. And this is, I like it because the swing low is before the highest point here, right? Not after. So if you, and there was fair value gaps, but it only came to fill this one. So this might, if you were waiting for, to hit only this or here, you would miss out on the straight. So it happens. It's fine. Absolutely fine. I mean, I personally probably would not take this trade either because this, this imbalance was not, and I teach in the, on my YouTube, I like to look for imbalances on the, inside the premium, right? If I short, so I would look for like, it has to be at least
Mhm.
above 50%. I would not consider this imbalance, right? Um, I wouldn't be interested. And then you have another swing low here that was broken too. And well, technically, yes, this was your displacement. Price came back, and this is pretty much 50%. Maybe you could short here too. But I think this stands out clearly because this was a very energetic run on the 5 minute. This was the only swing low on the 5 minutes, so there's no confusion like which one do I choose. You just have to wait a little bit longer, and then you can refine your 5 minute imbalance usually to the 1 minute. You can see, let's say here, and here, this was an imbalance too. And if you wait, if you this would be like if you wanted to, if you see, okay, this like two imbalances, which one do I use? And you think that price will go up to here, you wait for it, you miss on the trade. Or if you allow yourself for, okay, price is already here, if you just go short and you allow yourself for, just basically to be not as precise, or especially while you're learning, there's no really way while you like while you're new. I don't think there's a way for you to really tell like if the price will only hit this imbalance or this one. The only thing that you require, and a lot of people ask me this, how do you know it's going to go here, not here? It's really experience. You need your time on this chart, seeing things what's happening over and over and over again to know those things. So by while you're learning, this is a good, nothing wrong with that. Like it did not go to this level. So let's say if you enter here, as long as it enters this imbalance, you just account for the possibility of it coming in this gap, and you use your stop, let's just say here, like above, above this high, right? So this would be what? This is a 9 pip stop loss. I mean, come on, this is less than 10 pips. And you target, if you even just target this low, this is already, to me as a scalper, this is what I usually target. Like this is your 2.6 R trade, right? And it didn't take that long, 7:30. Well, actually, no, it took like an hour and a half. So that's, yeah. But that's euro. Yeah, it doesn't move as fast. But yeah, eventually you get your target, you can get your 3R. I mean, it drops further. It depends on how you want to look at it. But this is the most obvious what we define on the 15-minute chart. So if you want to exit here, let's say 2 point something, almost 3R trade. I would definitely close out when I see, like, when is a good time to close a trade. I would close out if I see price consolidating on the 1 minute for a very long time. This was literally consolidating for half an hour. I'm not waiting. It can retrace. It can go all the way back to my entry, maybe take me out, go back down again, or it can completely reverse. So, like, I mean, 3-hour trade, take it, and then you can look for other opportunities. When this happens below and like in pool of liquidity, just take, collapse the trade. So that's my approach. Even though it did go lower, just forget about it. You can look for other opportunities later. So that's kind of the idea. Again, I think this was a very, very strong and good example because you had your DXY correlation crack, right? It happened inside the 1 hour imbalance, and then you just drill down to the 5 minute to get a very obvious displacement and 1 minute entry. That's how I would approach this trade. And pretty much how I approach most of my trades, unless we trade during Asian session. If you've seen some of my videos, I can work with just the 5 and 1 minute charts in Asian session because I don't care too much about bias. I just work with, again, I just identify liquidity pools, and if there's a model that forms like an inception model, I'll take the trade to the opposing pool of liquidity.
Okay, good. So, and you've talked a little bit about order blocks, and you do not use it as a like an entry for entry. You mainly your main confluence to be like fair value gaps mainly, or
Yeah, mostly, yeah. I don't, yeah, that's the beauty of, once you learn like the core foundations of what Michael is teaching you, you can develop your own models and you see what works better for you. For me, imbalances stand out the most. It's once it's there, it's there. It's not uncertain. Like with order blocks, it also, I think, new people can find it a little bit more difficult because sometimes it's just one candle, sometimes it's several candles. It's really a matter of, again, nothing but experience. You will be able to like decipher what's not a block, what's not another block. But if I see, like I mentioned, if I see an order block just on the 1 hour, let's say like a down up, if I'm short, I'll just use it for targeting purposes. I don't use really order blocks for my entries unless I see, let's say, let's remove this. I don't know if there's an example like this. Let's see. So let's say, okay, so this was obviously, this candle is your order block, right? Like on bearish order block. I would just mark usually the bodies because that's where the most of the volume is. And okay, I see something like this. You can see price kind of nicely respected this area. And what I like to look for, if there's a 1 hour order block, and then I can go, and if there's an imbalance after it, like on a 50-minute, 5-minute chart, then I can look if price wants to come back and like inside the imbalance, and maybe I'll go short. You can see clearly here there was an imbalance here, right? And so sure, it did. Obviously, you don't just go straight away short when the price hits this area. You have to wait for time and price. This was Asia actually. So in between yeah, between basically 8:45, 10. Well, let's maybe give like an hour window, which I use for Asian session, but not nothing after like 9:30. But you would go again. Let's say you see something like this, you'll go on a 5 minute and 1 minute chart. Asia is really working well for me, at least on the 1 minute chart, really. So you see, if you see some kind of confirmations for a short, um, like for me, like if this is kind of ugly, there was, yeah, this was an imbalance and never hit it really. Well, maybe it did here. This is just consolidation, ugly, but then you start seeing displacement. Price comes back uh, inside this area, and you see this is what stands out to me. This would be actually the inception model entry, because you have an imbalance here, and you can measure it's in the premium to me because I'm looking at the closest fractal. I would look from this swing high, this tiny high that created the displacement. I almost mixed this up. Not even here. Yeah, this one. And to this low that started retracing. You can clearly see this was a perfect your, 75% entry. So this is your overlapping gaps. And I would probably short this. Well, actually, well, the only thing, while this, it did play out. Hold on. Uh, So let's say when you don't get a perfect entry, um, you can have your stop 10 pip, yeah, maybe 11 pip stop here above this high. Or as I like, once you get more comfortable, as I teach, I don't need this much of a stop if I trust that overlapping gaps kind of, stop price from moving further. So I can just put it a little bit above the highest imbalance. And this play did play out also nicely. And what's your opposing pool of liquidity? To me, that's your trend line. That's how I look at it right away. This is a trend line that kind of steps like this. The only thing with this trade is it happened like at 10 o'clock. So based on my rules, like I would, this was not the perfect
Right.
timing. I would not take it. I would, even though it did play out, it's better to, if you want, you can just demo trade it for just to, log it in your kind of experience. But if this was, let's say, around 9:30, I would probably I could have taken it straight. So really just Asian session, 1 minute chart. And I know that a lot of folks that can trade New York, they actually also, especially on the East Coast, like they can trade Asia, like maybe after work, something like that. So, or just like whenever you have time, yeah, like Asian session, I think is very overlooked. There are some easy setups and there isn't that much volatility. So you can get your usually, so you don't worry too much about, being stop hunted. Um, there are false moves in Asia, but if you again like just kind of follow those rules that I outlined on YouTube, you should be able to find 2 hour trades very quickly and easy for scalps.
Nice.
So that's
And
kind of, yeah, that's the way I would do it.
okay, perfect. And I've seen on your videos on YouTube that you were using overlapping gaps. Is this a concept that you can elaborate more on this?
Let's see. Yeah. Let me see. Do you want to stick with euro? Well, since it's,
It doesn't matter if you have a better you think you have a better
let's
example on
see.
other markets.
Because I'm an indices trader mostly. So just, I mean, the concepts are all the same, really. It's just so
Yeah.
it's very good that you mentioned when we started talking that you focus on only one pair. It's actually, yeah, in the beginning of my journey also, I had like 20 different pairs, like different like Aussie yen, I don't know, all those weird crosses that you also usually have wider spreads and they move weird. So once you narrow it down to just one or two pairs, it really, I think you can become like a specialist. If you focus on euro, eventually you'll start seeing things that only euro does, or
Mhm.
you'll see how euro correlates with the DXY. And that's why I prefer, when I look at SMT, I prefer euro versus the dollar. Versus the pound dollar, because I think euro correlates much, much better with the dollar index. Pounds, not so much. I know a lot of people use it all three for like SMT correlations, but I don't really use pound for that. So you can become a specialist in one market, but it's also good to be a specialist in different asset classes. Let's say if you want forex, so euro dollar, and then you can start looking at index futures, maybe Nasdaq or S&P. S&P does is not as volatile, so you can, if you can, I think if you trade in euro dollar, S&P could be a really good market for you to trade because it doesn't move as much. Nasdaq can be, you have to get used to the volatility, and US 30 especially, because like Michael mentions, sometimes when forex doesn't move, index futures will move, right? There will be explosive moves that that happen fast and they're trending. And especially if you cannot trade on the lower time frames, you have to kind of look at other markets. But for scalpers like us, it doesn't really matter. Again, you go on the 5 1 minute chart, and you can, even in consolidation days, you can
Yeah.
find some, something to trade. But for most people, they cannot be scalpers. So even if they trade only on the 15-minute chart, they usually look for bigger moves. So you have to, it's very good to specialize on maybe one instrument in different asset classes. I would recommend S&P 500. I personally don't trade it very often, like very rarely, because again, it's not as volatile. I like Nasdaq, but they move very similar. And again, you also use Nasdaq and S&P for SMT purposes, right? Let me see, Inception. Let me see. There was so the Friday NFP. Well, let's forget about that. Not the best. Let's see, maybe Wednesday. So let me see. Let me see. Let's actually, yeah, let's look at Asian session. I think there was some. So let me remove this. Okay. So this was your Asian session, right? Like it spiked in Asia, and we are basically, so 7 to 9. This is usually a time when I said I'm looking for trades between 7 o'clock and 9:30 the latest. So we had this huge run up, and usually after those huge spikes, price at least will retrace, a portion of this move. It will retrace, so you can, on the 1 minute, you can capitalize on it, even if eventually sometimes you'll see like an explosive move, price will retrace and then go higher. In this case, it completely, reversed. So this was really like a stop run above. So the first thing you would look at, okay, where was it? This was it. No, this one. So what happened during this move? You can clearly see that there was, again, the process is the same. 1 hour chart, right? Equal highs. The first thing that stands out to you. And you can look at this high also, very close to each other. So what did this run do? It took out buy side here, and it really went inside also this order block here.
Mhm.
Right. And when when I look at order blocks, when I see order candles with like long wicks, like this wick is larger than the body. So I would, the first thing I would target is the actual wick. This it's very important to distinguish. If, let's say, if it was just this candle like this, like full body candle, I would look at the bodies. But if you have wicks, very long wicks, I would consider this as your first, let's say, objective. If for some reason you were buying it, this is the perfect area to exit, and you can see the price never touched the body, right? So this is a tip that you might want to consider. But okay, so we see this run up, 1 hour chart, like took out buy side. So it makes sense for it to, at the very least, retrace from this move, because this was a very explosive move straight from straight from the opening, basically. And then you just go to I usually even skip the 5 minutes on Asia again, right directly to the 1 minute. So what stands out to me the most is, let's say, this imbalance here. And you have an imbalance here also. And both of these imbalances I'll look from this. See, I always, man, they look so similar, the fibs and the projections. I mean, this is the fractal I would be using from this high to this low. And now let's say this low, because this was this was like a very minor, this was a very minor move. When I look at fractals, I want to see a meaningful retracement. So from this high to this low, this was the only low that offered some kind of energetic move, retracement up. So you can clearly see, it's debatable. Maybe you could use this too, but it's not, I mean, it was just two candles and then dropped. So I would use this one, right? And you can clearly see this was in a perfect premium, this imbalance. So the idea is to look for both imbalances. So at least two imbalances. Sometimes if, life gives you three imbalances, that's like usually golden. But both have to be in a premium. You can see clearly this was also in the premium from this high to this low, right? Because we did have an energetic move up. So this is your swing fractal. And you see that price, so time and price, it's around 846. This was the first touch, second touch. Again, look how, so this was the area they overlap, right? Basically, this area. Look how this candle like wicked it. I think let's see the low. This is why, like, when you talk to people and say the markets are manipulated, this is the easiest way to just like show that. I mean, that's really, it's all controlled by an algorithm. So the lowest point here is 46.6, and the high of this candle here, look, isn't it beautiful? It's exactly the same, right? That's why I love it. It's exactly that. The overlapping area like this, like the lowest portion of it. So it's I think, it's absolutely beautiful. So that's the sense that I'm looking for. And then the moment I don't look for any kind of confirmations like break of structures based like ICT model teaches. But that's a very, like, ICT, I understand why he's giving this model, because it's very, it's a safe model if you know how to apply it. My model sometimes can be maybe a little bit risky to some, because there's literally, I'm not waiting for any kind of confirmations. I'm just going in if I see those things that I outlined. If I see price going inside this, I'm just going to go short. And let's say, let's say you missed this wick and you just, okay, but looks like it's rejecting, so you entered, I don't know, a little bit lower price here. Let's not sugarcoat it. So you can place your stop here. What was that? That's a 3 point, like 2.8, less than 3 point stop on S&P. And again, Asian rules, it was Wednesday, so you can target anywhere between 2 and 2.5 hour trade. And if you target just this low, this is, well, at this point, it's only 1.5, but you can at least put your stop at break even. That's what I would do. But I mean, it almost immediately, like two candles later, it gave you a 2R. And I would, 2.5R. And the moment, so this is like easy, like an easy scalp. It took like 20, like some minutes, 25 minutes. And again, if you're thinking about, oh, maybe I should hold a little bit longer, well, I would close out. I'll close out the moment I see this price consolidating for so long. And you can see that while price did eventually, drop, but it came back like basically 3 times. And I mean, you would, if you had your break even, you'd be stopped out, but price did come back again. So this is it, kind of, that's the idea. I skip the 5-minute chart on the Asian session, go directly to the 1-minute chart. After I see the price took out like hourly pool of liquidity, sometimes it's not even required. I just work with like the previous, this was an extreme case because it skyrocketed so much, but I can just, if it's not, if it hasn't done such a move, I'll just look at what happened in the previous few hours of the previous day. And if there's a previous liquidity pool, like this trend line, maybe I would, and price like is somewhere here, I see an inception model, I can short it against this lows. So that's Asian kind of approach. Let's see if we can find something for New York. Does this make sense?
Yeah, totally. And Do you mainly trade Asian session, or you'll do in New York, or it depends on your schedule?
No, I mostly trade New York. I just maybe Asian session trades maybe account about 15% of my total trades. It depends because I live in New York, so it's convenient to me to trade both sessions. And if I have nothing to do for the evening, if I'm not busy, I can look at Asian sessions, see like for a quick opportunity, but mostly New York. Yeah.
Okay.
So I think that again, Asian session is overlooked, especially when it comes to indices. And I've seen that a lot of times my model, like it's just forming inside the Asian session, like a lot. Like even just this week, it happened several times. So why not? If I know what I'm looking for, if I'm confident that my model like plays out more times than not, then and if my rules follow, right, time is right, both gaps are in a premium. If you want to short, I'll take the trade because I trust my model. Let's see. So this was, let's see, Thursday maybe. So Thursday was kind of ugly until, well, it's yeah, this was all consolidation right before the 9:30 opening. So for a New York session, I have this is how I would do. If I see a trade, let's just say, let's see, did this hit it? Well, this was, yeah, let me see. Let's say this imbalance kind of stands out to me. And then we have an imbalance here, but I don't think it's in the premium. Let's see. Is it? Let's see. So I would measure from this swing low to this. Well, actually this, yeah, a little bit, just slightly below the 50%. Well, like, right. So I could, consider this not ideal. I would like it to be a little bit lower, but still, it's fine. So this is, again, your overlapping imbalance setup then. And this happened 8:30. So this is, let's say I did not take this trade, but let's say if I did, if I see a setup like this and I want to take it and I want to go long based on imbalances, I see, what's the first thing that I look at again? You can look first at this double top kind of, because there was well, it's a clear double top, and then this wick. So this area basically in between, I would look for that to be my potential buy side liquidity. But this is a much stronger area because there were like a lot of candles here. This wick, this was some kind of news spike or whatever it is. It's not as important to me because this was a huge just spike. But this is much more meaningful because again you have your full body candles here for spending some time. So let's say if I went long on this trade, let's say my stop would be, can be below here, below this candle that create, kind of started the move up. This would give you, this would not give you a 2R. Depends on where your stop is. Again, if I'm confident with my model, again, I don't need stop to be here. I can make it lower. I can get my 2R. But let's say if you're, that's not sugar coated, you're new, you want to be safe. This is a good place to put your stop. So you see that, and you entered after 8:30. So you see that the price, price started going in your favor and then it starts consolidating. So you have two options, and the market opens, right? The equity is open at 9:30. So let me just put a, usually when it brings the volatility in yeah, so you can see immediately the 9:30 equity is open. So if you are in a trade before in the 9:30 open and you see that your trade is in profit, but it's not giving you like, well, 2R will be where, well actually it did, but okay, whatever. Let's say your target was at least 2.5, somewhere here, and it's not giving you that. It starts consolidating. So there are two things you can do. You can either close your trade in profit, a little bit less than what you wanted, or, well, obviously your stop loss would be at break even at this point. because you see that prices, the time is approaching 9:30, so you know there will be a lot of volatility, and two things can happen. Either trade will go exactly in your favor, it will spike up, or it can actually, spike against you, maybe take you out, like do, and then go up. So it's up to you. You can either completely collapse the trade or take partials and then have your stop loss at break even and then let it do what it wants to do at 9:30. If it takes you out, you made some partials, made some
Yeah.
profit. If it goes in your favor, great. You make great, like this was an explosive move. Your last partial make a huge return, huge R. That's kind of how my approach is. If I see consolidating out, in the very least, I would take partials and not close the trade. But if I see that it's really a lot of buy side here still, I might just, like, again, definitely secure my trade, take partials, leave a tiny, maybe I would close out 70% of the trade just to pay myself and leave the 30, for the market to do what it wants to do. If it takes me out, I don't care. I made money. If it goes in my favor, great. I'm on that extra 30% left on my position. I'm making like 3, 4, 5 R, whatever it is. That's my approach, and I think it's very reasonable because, again, it's hard to predict, especially when you're new. And I mean, I don't always really know if price is going to spike down before going up or skyrocket completely. So that's a safe approach if you trade before the 9:30 opening. But then you have an opportunity to trade after 9:30, right? You wait for the volatility to come down, maybe for like half an hour or 1 hour, depends on, but usually, yeah, like after like 45 minutes ish, you can start looking for trades. This was really ugly, kind of. There wasn't much, just consolidation and going up. This was really, if you look at it, what stands out to me, this is why I think what, like, order blocks can be confusing for new people, but there are so many down close candles, so many, right? So many. How do you know which one to choose? But to me, what stands out is this largest beefy candle here. This is what stands out to me. This largest out of all pretty much candles in this consolidation. Like, this is the largest one, and you can see the price kind of really respects it very well. Like, it stays inside of it and then it goes higher. But for me, this is no, like, I would not enter. There's no criteria for me to enter. I don't like this. But you can see, like, when price broke this high here, like when this candle perfectly retested this candle here. So this is a little bit tricky to me. This was ugly and not something that, like, I would take. I think it's not as easy to see. But the idea is to, if you are long, like, you want to look for continuation setups after like maybe an hour from, the market, from 9:30 opening. And look for the same things and then just target your 2-3 hour trades and just be done with it. That's the idea. And again, I think it's a good way to practice on a different asset class, because if forex is not moving, there's no as indices will, and you can no, if you scalp, you can get your 2-3 hour trades and just be done with it.
Good.
So how do you feel so far? All making sense?
Yeah, I feel good. It's very nice. And so, like, would you also use? There was a video that ICT posted like 1 or 2 weeks ago about dealing range. Is this something you're looking at when you're starting a session?
Well, yeah, a kind of dealing range is, well, a good example was really like what I posted, last posted in on a Telegram. Let me remove this and walk you through this. So obviously, dealing ranges are good to look for, opposing sides of liquidity. How I like, but it's not really needed unless, well, you can form a trade based on, if you have a dealing range here. Let's say how I had it here from this high to this low. So your trade can be entering inside anywhere. If you enter long here, basically you're entering inside the dealing range. That's internal liquidity. and your target can be external liquidity, like liquidity outside the dealing range, like these highs. So it depends on how you want to frame your model. It can be internal to external, but a lot of my trades are really internal to internal. I can work within this range, as a scalper, like get in, get out. So this is more for like people who want to hold trades. But how I like using it is, like I explained previously, I look at usually the true day open, as ICT mentions, Forex or indices, doesn't matter. It's really at midnight, New York. So anything like, even though you can scalp here, but the true day really starts here, and you can start the dealing range, like just, look at the highest high, lowest low, and you see what the market does inside of it. And how I like to use it, this is something I discovered. I don't think ICT talks about it. Um, but a lot of times, like I would, but this is more risky. That's why I don't recommend, kind of like, I recommend backtesting a lot before engaging if you want. You've seen me, short, where there's also no really confirmations besides like price just rejecting the, like this area here, the 25.5 extensions, because this is your external range now of liquidity from the true day opening. And usually, and again, there was just when certain, I guess from my experience, I see certain things in price that let me enter without, again, any kind of confirmations in terms of breakup structure. Um, so if I shorted, I can short. That's how I just use a dealing range. If I believe I like what I'm seeing, I can short anywhere inside this area for a scalp. And usually it can completely reverse, or it can just offset some of this run up and then go higher. So if I am short, let's say anywhere between this area, I would just I can target the original, the origin of the range. I can target here to exit the trade. Or also, you'll notice a lot of times price will go back inside the this range again here, also kind of the 80% of the range. But if you look at it really, this was also let's go to the 5-minute chart. See, there's like on the 1-minute chart, there's a lot of noise going back to, if you're confused, like what's the swing low to use, because this is swing low, this is swing low, this is swing low. Which one do I use, right? It's a lot of them. And but on the 5-minute chart, there's only one swing low, right? This one. So it eliminates a lot of confusion, a lot of noise. So you see, okay, if you wait for this displacement, you see it did create an imbalance here. 5-minute chart low is broken, and this is your ICC YouTube model, right? And yeah, messing this up. Where this? Oh my goodness, where's short? Okay, here. And let's say you entered here. Okay, also maybe just right here. So your stop. This is a case where, again, yeah, your stop will be above the can be just slightly above this high. 35, let's say, points. What's the opposing part of liquidity? This low, which is slightly below the origin. This will give you, well, for a scalp, if you want 1.8, but well, that's your 2R right there, really. And if you target this level, which did, I mean, this is like a nice way to trade it. And this was, it gave you even more. But a lot of times, if a high time frame is still bullish, it's not going to retrace this much. It almost gave back 50%. But you'll see a lot of the price will either stop at this level, maybe a little bit below, or like these levels here. This is just something from like what I observed from my experience. So this was a good example of an ICT model entry where some people might not be, and this was, well, the only thing that this happened close to lunch, but when ICC says not to trade.
Yeah.
But the good thing is that, when you learn the rules, obviously you want to be safe. But the idea is, like, as I like to say, you learn the rules to eventually know how and when to break them. Because if I discovered a lot of things when I started breaking the rules, kind of. And this made perfect to me. It might not make sense to anyone else. To me, I see it perfectly rejecting the extension. And look at this, the price of this 1.5 is 84.1, and the highest candle here is 84.3. I mean, it's less than 1 point difference. Like, that's precision. So once I see this, either I can enter, even because just from what I trust in this model, I can just enter somewhere, maybe here, or like after it starts kind of rejecting without waiting for this. Or if it gives me some kind of confirmation inception model ICC of entry, and maybe I can enter here and get out at a logical level of this sell side pool. That's all I need for my scalp. So that's how I'm using dealing ranges. Really, I like to look for those when price gets inside, these deviations, and see if it can get me some kind of a sell confirmation. That's what I'm looking at. And again, the good example of 5-minute chart being unambiguous, only one swing high broken, ICT model played out nicely, and then it retraces back up. So plenty of opportunities, plenty of opportunities. This will be the example of targeting, trading the external liquidity inside the internal. See how like there's so many ways to frame the model. And again, this spike also took out the Thursday high, so it makes it even higher probability. Yeah. But this was, I observed this. I was not trading Friday. I was just looking at it. Let me looks like the extension, because I kind of developed my eye on it. The same thing happened on Wednesday. This is actually when I posted, I shorted this. Same thing. This was all consolidation day, only good for scalpers. So true day was at midnight. So what do? Like I said, you just look for the highest dealing range, right? The highest swing low, swing high, fibs. So lowest point here, highest point here, and well, you have your range. We had some wicks here, but look at the bodies. Bodies closed perfectly inside of it, and this is somewhere like I shorted. Oh, actually, yeah. So I shorted here, but around here I saw this small imbalance. I shorted by my stop. This is the case. I did not put my stop here first because it would be just too narrow, way too narrow for the for all the volatilities that we had. So it almost hit my stop actually. Well, like I had not really. I think I had like a 15-point stop, something like this. So I allowed myself to, give myself some room because of the volatility, and it went against me. So again, it's more risky, but that's what I do. Usually it pays off for me. It pays off more times than not. And this was 100-point trade. I mean, this was actually this was like, just if you target this low here, this low's here, that's like a 4-point trade. So that's what I do. Same example. And if we go back again, this price retrace before going higher. It trade. Let me reverse the fib. You can see that the price exactly also, when it retraces down, it retraces inside the 70.9 area. So, I mean, this is beautiful, right? And then in Asia came back. I shorted again here, right? I did the live recording on this. It just stopped out. It took out this low, swing low, and then started going higher. So that's what I like to do. And it was a PM session for indices between 2 o'clock and 4 p.m. So this was good timing. And the price extended so much, it filled my criteria, and I exited. Yeah, I did hold for longer. I exited somewhere here, actually. So this was very fast and easy. That's what I like to do, but it's a little bit more risky. You can get comfortable once you have more experience with this. So that's how I use dealing ranges mostly. I look for those extensions, and the same thing actually happened last example, just in gold, just to throw you in there. Also, even after NFP, same thing. It happened so many times this week. It was beautiful. And on Bitcoin, I took the same trade, and I don't really trade crypto, but this was like, I mean, a few trades were really good. So true day opening, midnight, dealing range. This was your high to low when you're looking for like before the noon session. Where is this? I mean, this is perfect. And again, price came back to at least this area here. So this is where I would definitely, usually this is the area enough for me to, if I am short, I would completely be out of the trade in about like from 1 to the 80%. That's how I do it. I think it's good if you can, back test it, see if it makes sense for you. Euro, same thing. It will happen the same thing in euro. It doesn't matter what asset class, but just to show you that happens across literally this week, Bitcoin, indices, and gold, and it was beautiful. If there's something that you think that you like, you can try maybe trading it definitely on demo. But if you feel like you're getting confused and you get stopped out more than that, then it's fine. Just stick with what works for you with the ICT YouTube model. I'm just showing you examples of how I trade, right?
Yeah, but it's a great example. It's the extension of the range. It's interesting. I will look at it for sure.
Yep.
I never saw it like that.
So that's that. Yeah. So yeah, how you think this is worth your time?
Yeah, a lot. Yeah, very.
Okay.
And that would like complete the my questions about the inception model. I would have like a question about psychology a little bit. I don't know if
Okay.
you wanted to talk about another point of the inception, or you would be done about it too. I don't know.
Yeah, I think we can talk about psychology because honestly, well, pretty much everything that I explained on the videos on the exception, I try to, break it down as simple as I can. Those are the rules, and it just kind of showing you more examples and combining it with just giving you a bigger picture. If you see some kind of a high time 1 hour liquidity being taken out, and you can start looking for trades using the inception model in Asia or New York session, wherever you're comfortable with. But the rules that I gave on publicly, that's universal. I don't know what else to really
Yeah,
give about. So yeah, we can talk about psychology or finding challenges, whatever you want.
yeah. Okay, nice. So with the so obviously like you're an experienced trader, so I don't know how do you manage your risk today or and according with your psychology, but like me as a new like a younger trader, I found like difficulty when it's a winning days, it's perfect, it's very easy. I win my trade and make my profit and that's it. But sometimes when it's not that I don't know when to stop, but I would like to see your approach on psychology. Like if you would start a session, see your setup, and then it took you out like right away. And I don't know how much do you risk, would you risk, or how much you allow risk to how much profit you could
I see.
take per day
Um,
and per week. I would say.
mhm. Okay. So usually, let's say if I do like if I take two losses in a row, I would stop trading if not for the day, but for the session. Let's say if I take, two losses and if I trade indices, I take two losses in the morning, I'll stop and I'll see if I can come back that day for the PM session. But if I trade Forex, I'll be done for the day, right? Because Forex, you usually don't want to trade after 12 o'clock,
Yeah,
1 p.m. It's not high probability. So if I take losses at around 9 o'clock, I'll be done for the day. I'll wait for the next one. And it really, well, on my personal accounts, I can, well, it's not to sound arrogant, but I know that most of the times the things I'm looking for, I have a pretty high strike rate, right? Strike rate. So I'm not too afraid. I would not, if I take a loss, I don't, on the next trade, when I go in, I do not reduce my risk because usually I know that there are high chances that I will get it right. I don't have two losses in a row that often. It still happens, of course, but it hasn't happened in, like very often recently. But so I don't reduce my risk. Although it's probably a good thing to do, but I just don't, because I trust that the models I'm looking for, they play out more times than not. So I personally don't. And on my personal accounts, I can risk in 1, 3%. Sometimes if I see a solid set of 5%, I don't mind. If I'm like on this account that I showed publicly, if I'm up, if I already more than doubled my account or tripled it, I can definitely up my risk on good setups, maybe even risk 10% on a very solid setup, because only because I'm already more than double my account. But I can sometimes do that too. But and if I lose, well, I lose 10%, that's fine. I'm still, like my equity is still high. I don't mind losing a little bit of it, because I know I'll get it back. But on the funded challenges, I don't. If you want to stay long in the games, because I did lose my first FTMO because of greed. I got funded. I traded it for a few months. It was good, and then on just one trade, it wiped me out. I took the daily loss limit. It was in profit, but I didn't close. I got greedy, and then the
Okay.
opposite took me out. So just one trade basically got me. Like it canceled my account. So I would, if on my funded, I never risk more than 0.5%, usually between 0.25 to 0.5%. And let's say if you take two losses on a 25, so you're only down half a percentage. So you're not stressing about it too much. You only down 0.5% if you take two losses, and then you come back tomorrow and you can risk the same 25%. And if, let's say, you just target a 2-hour trade, at the very least, you'll break even from those losses. All you need is a 2-hour trade to break even, right? You'll be back at, yeah. And if you target 3R, you'll be in a little bit of profit. And that's kind of my approach to it. I don't think I can say too much about it. It's like with experience comes confidence in your system. When you're new, it's absolutely a good tip to reduce your risk after a loss. So let's say, okay, you went on a 1% risk, you took a loss, so you're down 1%, and then your next trade will be 0.5%. And all you need again is just a 2-hour trade to break even. Once you break even, you can go back to 1% risk. That's a really good approach, especially if you don't have a high hit rate, and you won't while you're still developing. It can take you 2 or 3 years for your win rate to increase dramatically, but eventually you'll get there, and then you can kind of deviate from the rules and not really reduce your risk because you trust your model. If you have a system that works more times than not, then why would you really, the chances of you losing twice in a row or even 3 times in a row, it diminishes dramatically. At least that's how I look at it, and that's how I've been trading. Again, if I have like two losses, all right, maybe I'll stop for the day, and next day I'm not gonna go, and on my third trade I'm not gonna reduce my risk. I'm just gonna go with my same risk, and all I need is just a 2-hour trading and break even. But that's how I see it. Some people might disagree, and that's fine. But while you learn, yeah, you can reduce the risk. And psychology is that, again, I think with the confidence comes when you spend so many hours on the chart, like literally thousands of hours across a few years, and you see you're subconsciously, your mind records all the trades, and it filters out eventually all the noise, and it kind of helps you. You can call it the hunch or intuition. Let's say you see a model form, potential area for your model to form, and sometimes you'll be like, okay, you know what, this doesn't look right, this just doesn't look like it's in the right place. It looks like a model, but it's probably not going to play out, so I'm not going to trade it. And usually usually the trade would, if it would go against you. So you're like, okay, good. That comes with experience, and I guess intuition, after your minds have seen so many setups. It kind of, it repeats all over again, and at some point you will be able to filter out those trades. There's no way around it. Nobody can teach you that. It has to come from your own experience. And once you have your confidence in your system, yeah, you don't really fear losing trades. And if you have multiple accounts, like, I have a funded account, I have 3 other personal accounts. And if I take Some of the accounts I copy trades between them. Some trades I take just manually, and if I take a loss on one account, maybe I'm up on my other accounts, or so it doesn't really affect me, at least not at this point. So yeah, it's I guess it's, can be a controversial topic how you approach it, but that's just how I do it. Especially as a scalper, I know that I can trade. I don't have to wait for a next setup very long. If you're a swing trader, you took two losses, but but you only can take 2 or 3 trades a week because you swing trading. So of course, you might want to get in faster, or like you're like, oh man, I have a losing week, have to wait for the next one. But scalpers like us, okay, just go in the next session or the next day.
Yeah,
There will be something to trade on the lower time frame. That's why I think scalping is best, because you develop as a trader much faster. You take so many more trades than people who day trade or swing trade. Literally, I can take 3, 4 trades a day, and that can be like a swing trader can take 2 trades a week. So you develop faster, you learn faster if you can target lower time frames. But not everyone, of course, can, because of work, school, or whatever reasons. But usually there's, again, if you work during New York session, I gave a model that works in Asia. I don't know much about London, barely traded because I sleep, obviously, but the same thing. Like if you work in London, you probably can trade New York, find something there after work, after school, whatever it is.
yeah, exactly. So, and what would you say was your most difficult challenge to surpass during your? I think you're 5 years trader now, and
Almost, yeah.
yeah, and you've been profitable after I don't know how much year you. I
Well,
didn't.
yeah. Well, sorry. So, okay, what's your question? And
Like, what was your most difficult challenge to surpass in trading, like during your journey?
Mhm. So yeah, I did. Like I mentioned, I actually was profitable before I even joined or started considering ICT. I found a system that works for me. It was derived from Steve Mara's BTM, which is actually nonsense. It's really, if you look at it, it's kind of a copycat of early ICT notes. But there was a bunch of indicator system there, and it was pretty complicated. I made it simple, found what worked for me, and that was profitable. Not as crazy, but I made it work somehow. And now I look back and I don't know how the hell I was trading it. But the biggest challenge was, I guess, psychological, because yeah, I did have a hard time overcoming my losses at first. I was like, I'll get, if I lose a trade or two, if I have a losing day, I'd be like, damn, can I make it or not? Like I'm in a bad mood, and it affects basically
Yeah,
every area around me. It affects my day, it affects how I can talk to people, the people who I care about. Yeah, it wasn't, easy to overcome this. I guess what helped is I'm big on meditation. I like to meditate, just quiet your mind, and then it improves like every area of your life. I don't know if you're like into this, but I really, the
I'm
moment I started,
interesting. Yeah,
meditating every day, just for like 20, 25 minutes, just silent meditation, with your eyes closed, like sitting in a, like sort of like if you picture the Buddhist monks, like how they sit in it's called the lotus pose. That's how I meditate. No, not that fancy way they show in like yoga classes, like bullshit.
yeah,
How like with your hands like on open. No, you have to have your. I can send you a picture later. Like basically a lotus pose with your hands close to your belly, closed in, and you just meditate for like in the morning, maybe before you trade. That's my daily routine. I wake up and meditate for about 25 minutes. I it's such, I don't know how, but it just works. It's scientifically proven. A lot of like benefits of meditation, like there's videos on YouTube what happens to your brain. You just become more calm, more peaceful, and you like, it helped me overcome those losses. Like, okay, I took a loss, but the longer picture, I know that I'm profitable in the long run. I can take a loss today, maybe even tomorrow, but a month from now, I will still end up in profit, because I know I have a system that works more times than not. So losses are part of doing business. You have to treat trading as a business. You cannot have only revenue coming in. You have to have like incur some costs, and losing trade is the cost of it. If you think of it as a business like that, um, every losing trade is just a losing transaction. But in the end, if you sum them all up, you're still profitable. That should make it kind of you look at it at a different perspective, should make it easier. And again, meditating just helps your mind stay still, calm, and like improves every aspects of your life. Really, I used to have big headaches out of nowhere, like just migraines, like very random migraines. And the moment I started meditating every day, like literally after 2 months of meditating like that, they were gone. So like first my physical health improved and my mental health improved. And I think if you want to be successful in trading, you also need to be, yeah, you have to have a peaceful mind and take care of your body. Like I just go to the gym usually, like 3 times a week, 3 4 times if I can. Nothing crazy, but just to stay fit, because
Mhm.
that's common sense. If you have a healthy body, healthy mind, you can be more focused. And this trading is it's psychologically, it's challenging, it can be mentally draining. So you need to stay on top of your game, just stay fit, be clear-headed, less alcohol too. I used to drink a lot when I was younger. I try not to drink as much, and now, and it's been nice. Not saying you have to become a monk, not drink at all and just meditate, but those positive habits that you have in life, they translate also into trading. It's like a direct correlation to it. You'll see huge improvements. You'll stop fearing losses. Once you have a system that works, and again, ICT's YouTube model is perfect. Once you become good at it, just stick to it. And eventually you can start slowly deviating from his rules. Maybe you'll find something else that works, or again, your subconscious mind will kind of say, okay, this doesn't look good, so I'll wait for the next setup. And your strike rate will increase. There's just no way around it. You have to, spend a few years and it will come.
Yeah, perfect. That's great advice. Thank you, man.
Absolutely. Good. Good. All right. So yeah, has
Yeah,
hopefully this was good and interesting for you. That's Yeah, we've been here almost, yeah, it was over an hour. So hopefully, you picked something from this, and if you do some back testing, forward testing. One tip on back testing, I actually don't like back testing because you don't really you kind of, back testing, it's not as good because you already see what happened, with the candles and everything. The best way, I think, to learn is, even if you don't trade or don't even take trades on demo, just observe. If you can see the markets live whenever you have time, and you see a model forming, don't take it even on a demo. Just kind of see, okay, this is potentially where I would enter, and see if it plays out or not. So seeing price develop real time, seeing the candles move, you're like, okay, maybe this candle spiked. This is where I'm going to enter, right on the spike. But then the candle closes, lower. So you're like, okay, this was a good entry. But when you backtest, you don't have that opportunity because all you see is like the full candles, right, forming. So live forward testing is always better than back testing, because I think it will increase your learning rate dramatically.
okay, nice. Yeah,
Yeah. So that's all right. So this will be kind of my last piece of advice, I guess. And
perfect.
yeah.
Yeah,
Okay. So yeah, on this note, yes, we can wrap things up. Hopefully you enjoyed this. I enjoyed this.
yeah, I've enjoyed it a lot. Yeah,
Yeah.
thanks a lot.
Okay. And yeah, again, everything, like, can be a good also. I mean, it's not, it can be, definitely is a good thing to do, is to rewatch older videos from ICT, because sometimes, like, you learn and you might not understand what he's saying, but if you come back to the same video 6 months later or even 3 months later, you might discover something that you haven't understood previously. So it's always a good thing, to go back and rewatch those videos. um, it's an iterative process. That's how you learn. If you put in the work, you'll get results. There's no way around it. I'm not special, like, I sacrificed so much for this that eventually made it work. I'm not like a genius. You don't have to be a genius. Just a lot of hard work, like anything else. Like a college degree. If you want to be an A-class student, you have to study real hard, better than others, longer than others, and sacrifice maybe going out, parties,
Hmm.
not seeing friends. It's yeah, not easy, but I think it's totally worth it.
Yeah, makes total sense.
Yeah, so that's the idea. Nothing that you want, nothing worth having in life comes easy. So again, once you get it, it's just it is life changing. The moment you start making consistently 1,000, even just $1,000 a month, I don't know where you're from, where you're living, but even in anywhere, like an extra $1,000, especially now, it can, it helps a lot. Just $1,000, it can pay maybe for
Mhm.
half of your rent, or it takes care of a lot of your monthly expenses. The moment you hit the target, when you can consistently hit $1,000, it will already be a huge change in your life. And then from that on, you grow and you can go on with your funded challenges. I think while you're learning, just don't try to rush into spending money for funded challenges. I know how like it's very easy to get lost in it and like, oh, I can pay $1,000 and get a 200K account. But if you don't have a system yet with a high win rate, then to probably just give them money to the company. So don't rush it too much. Maybe once you get comfortable, open a small live account, um, see how it is, like, so it doesn't affect too much on your psychology, and then try a funding company. But don't rush those tests, giving money, because you'll most likely lose early on. um yeah,
So you would
that's it.
like very like you would start before any funding challenges. You would start your own personal account, like
Yeah,
even with a lower amount of money. That would be
exactly.
better
I
for you.
mean, whatever you feel, I don't know, like, I'm so like, I know, can be $100 account, whatever, just like, and trade micro lots. It won't affect you, right? Like, like if you lose like $2, $3, and just see if you can, that $100 account, if you can hit that 10%, for what funds like trades in micro lots, or hit that $10. It's not gonna, like, $10 not gonna make any sense for you, but also it shows that you can be consistent. And then if you can do it consistently, for maybe 4 or 5 months, 6 months, then okay, maybe by the time maybe your $100 account is at 200 maybe, and then use that money to purchase your funded account. Yeah, and try it, like, get a, what, 20,000 maybe. You can try MFF, I think, for like 20, I don't know, like those, 10,000, $20,000 accounts. Don't go for the largest accounts. I think it makes sense. Like, if you pass, generate profits from the small accounts to buy a challenge that is like higher, like 200K challenge. And then from there on, it's, yeah, the sky is the limit.
Because the scaling plan is very interesting with the funding company. So
Yeah.
yeah, that's you don't start with not necessarily the biggest account is not necessary.
I think, yeah, especially if you don't have a lot of money to spare, why, like, just start slowly. It's not, like, I perfectly understand everyone wants to be rich quick.
Yeah, yeah, but
It
it's not a
doesn't work
sprint.
like
No.
that, right? It's like, it's psychological, and that's how these
Yeah,
companies get you psychologically, because
yeah.
people spend crazy amount of fees on those larger challenges and they keep losing. So start maybe, yeah, $10,000, maybe, like, the funding account might be like a little low, but there's like 25,000. I think 25,000 K is a good amount to get that account, and get some. You should be able to make $1,000 a month from it. Uh, if you have a good system, like, without any issue, and then you use that money you know to pay for higher, tier challenges.
Yeah.
And yeah, so that, like, don't rush into those crazy 200K challenges right away. That's just my advice. If you want to say, like, yeah, it's gonna take longer, but it's, again, it's a, like I say, it's a marathon, not a sprint. So it takes time to get to where you want. And I've been trading for 5 years. Only the last year and a half, I guess, I really feel at the point, like, well, yeah, at the point where I want to be. And it's only, so it really took me 3.5 years to start making that kind of money, which I feel comfortable with. And so, yeah, again, like a college degree, it takes time, or anything else. You can become good at it, but you start slowly. You don't all of a sudden come in and you start making $1 million. You start gradually, and then you grow. Same with any job. You start low paying job, and then you can progress and get your, climb your career ladder. But you get the point. If you want to be safe with your money, just start slow, get better, get experience, and then, again, sky is the limit. Even with just $100,000 account, you can do very well. With the FTMO or whatever other companies. If you can make 5% a month, that's $5,000. You get paid 80% of that. That's $4,000. That's a huge impact in your life, positive impact. And from there on, again, 200K, that's already life changing money if you can make 5%, I think. Okay. Hello? I think I lost you. Can't hear you. Yeah, I lost you. Can't hear you for some reason.
Well, so I think my audio just
Oh,
went off.
no. Yeah. Okay. Now. Okay. All right. Anyways, well, you get the point, right? Hopefully this was good, interesting for you. And I wish you all the best. I just keep on doing the good work, putting in the time, and you will get results. You'll be successful. Okay. I wish you the very best. This is an exciting journey. And again, it will change your life for the better.
Yes. Thank you very much.
Okay, man. So yeah, let's stay in touch. Let me know of your progress.
Yeah, perfect, man.
Very curious. Okay, let me see what you've learned. Let me know how you feel about it, and maybe I'll talk to you next time in the group or some point later. Okay.
Yeah, perfect.
All
Thanks.
right, man. Have a
So
great day. Have a good weekend. Take care.
yes, have a great day. See you, man.